Welcome to the Financial Freedom Summit. In this series, you'll hear from 21 experts sharing powerful, little-known wealth building strategies that 98% of people are not using. These interviews are packed with real actionable steps to help you fast track your financial freedom. So let's jump in. Here's today's guest, Ping Hsu. Hi, Ping. How are you doing today?
Very good. How are you?
I am amazing. I'm so excited to do this interview. I have a quick bio on you because I want to read to the audience because this is such an impressive bio. And you have achieved great things, amazing, that have been amazing. So, Ping is a seasoned real estate investor and broker specialized in value add projects across Southern Ontario and the Midwest Ohio markets. Ping began investing in 2010 while studying engineering, but by 2016 realized he couldn't see himself working as an engineer for the next 20 years. He quit his job and dove full time into real estate investing. And since then, he's built a multiple seven-figure companies under the Elite Real Estate Network, spanning a high volume wholesaling business, active investments, property management for 800 plus units, and an education platform. Ping, is there anything that you cannot do?
A lot. This is just yeah. This is many years of hard work to be able to build a little bit of portfolio for myself, and obviously with a lot of team members and contributing to this vision. So yeah, I got a few things I can share definitely about my journey.
Yes, I'm so excited. And I also want to add on another important tagline that and title that you own, proud father of soon to be two and husband. So
Yes.
a family man as well as a financially free entrepreneur. You really are living the dream, which is incredible.
Thank you. Yeah, I would like to obviously, continue to elevate this legacy or journey like forward for my family. So yeah, trying to be there basically.
I think that's what, like most of us entrepreneurs, I know for myself, it all comes back to legacy and family. It's always something greater than like a monetary value or prize. It really just comes back to doing what we really want to
For
do
sure.
in life, which is always amazing.
Yeah.
Excellent. All right. So let's get into the questions. What's the wealth building strategy that you use that has created financial freedom in your life that most people do not use? And why do you think it is so underused?
Yeah, I guess the way I view real estate is a little bit different from a lot of, I guess, real estate investors, on the internet, where people are talking about just buying real estate, creating passive income. How I started actually is, I try to focus on monetization initially, and there's a reason for it because I came from a really fortunate position. So my parents were already like building their portfolio back in Taiwan. That's how we were able to actually immigrate to Canada. And I guess in 2010, when she was looking at how I was studying for engineering program, she didn't have a lot of faith in me, passing that engineering degree or have a decent career. Because they're always an entrepreneur investors. They knew how hard it can be. So they always wanted me to go through that, 9 to 5 corporate job and then invest on the side type of route. But yeah, she didn't think that I could do too well in school, so she's just like, let's start real estate investing as early as possible. So starting in 2010, she kind of pushed me in there. I really did not enjoy it, kind of just did what I had to do. But from there, I learned that, by 2015, I got like four student rentals, still not having enough cash flow. And this is where I shift my mind into, you know what, the only way for me to actually stay in real estate long term, I need to find ways to start making active income. So monetization, this idea came into my journey very, very early on. And that was what I was able to actually replace my full-time income as an engineer, and be able to kind of stay in the field for the past like decade, basically.
That's incredible. That's incredible that you managed to figure all that out. So, like, you started real estate earlier or quite early, and you were lucky that you had a family that supported real estate, believed in real estate. Real estate's obviously the vehicle of choice. So, what really, in that engineering moment, like, was the time when you're working your 9 to 5? Because I do love a lot, we work with a lot of engineers as well at RPI.
Mhm.
And a lot of them are, saying the freedom that I want in my life is to be able to go to work every day, but really no, I don't have to be there. So I think income replacement is huge. Was there
Right.
a particular moment that you could recall while you were slogging away in the rat race, doing the 9 to 5 engineering, something you were kind of half foot in, half foot out, that you realize I can't do this anymore. I need to make my financial freedom goals
Right.
happen now.
Yeah, it didn't even take that long. Like a lot of people are in the field in that position for a while, and they eventually get that career fatigue.
Mhm.
Mine started 2 weeks in. Like after I started, I'm just like I looked through everything. I was very driven. I want to learn everything, and I started having a lot of conversation with the senior engineers. And one thing I realized is that none of them actually have the investment set aside, which was a little bit odd to me because growing up, I always see real estate, rental properties, and all that stuff. Not that I came from a wealthy family, it's just that my mom would put me into her properties to take out some garbage, do some paintings and all that stuff. So I thought that was normal to a lot of people. And my dad always looked at stock, in S&P and all that stuff, right? So I always have a bit of an idea on the investments that eventually I need to get in there, but I was pretty surprised when I was engaging in those conversations with those senior engineers. They say we simply don't make enough to be able to invest. And at that point, I'm just like, okay, do I truly want to be in this field for the next 20, 30, 40 years and still feel like I'm unable to actually retire and control my life? So that's a very big pivotal moment for me. And the next thing I looked at is that do I see myself working in that job? Right. And by the way, I was still working very, very hard. It's just I knew that I need to start like preparing for the secondary option for myself.
I
Yeah.
love that. I love that. And it's like I often say that to my kids when they're working on their internships and to other people like do like ask around the workplace and see what other people are doing and ask yourself that question. Do I want to be doing what they are doing in 10, 12, I'm 20, not 12, 10, 20, or 30 years? Or
Mhm.
is there like a fast track that I could be taking? And so it really is important to be cognizant and sort of be aware and really kind of look at your current environment and ask these questions. So if people are in their workplace right now and you want to continue, that's amazing. Creating financial freedom on the side can be just as amazing. But I think we all do get to that point, where you realize I want to do something different. What could I start doing? So after that, you started doing real estate full time. And I know you mentioned that you made some mistakes. Same here.
Lots.
I think it's inevitable. If you're a true real estate investor, I think it's learning through doing, which I think for coaches like you and I, it's so important to kind of help, soften the hits that unaided investors can get. They could just follow people like us and go through these processes, which is the whole purpose of the summit. So I kind of want to get into the weeds here. And I really want to kind of ask you to walk us through your strategy and like really how you kind of use the strategy to fast track your wealth and create financial freedom in your life. Because you already had real estate. Your mom introduced you to it. Your dad was doing stocks, S&P. You knew the importance of investing, but you really still did it your way. So, and I don't know if they ever got the same results that you've gotten.
I mean, they build a foundation. So
Mhm.
anything above that, I still contribute. That part of the reason why I'm able to do that was because they actually compressed the time for me already. But I do want to mention one thing that a lot of big decision that I was doing, in going through with this journey, I neglected a lot of their advices, and then that's how I also made a mistake. So. One of them, to be honest, is just to like they actually always emphasize one thing, is just like you want to find ways to produce cash flow. They always talk about that. They always talk about don't over leverage, right? So make sure that you control your loan to values and all that stuff. And none of that I didn't understand any of that. As I was transitioning, the very first thing I did was borrow money. Private money, high interest rate. Back then it was like 6.5%
Mhm.
was considered as high as a private money. There was another interest rate that the I guess the second mortgage position, like private loan, was 12%. I thought it was just a tool, which was a tool. but I didn't have the proper exit strategy. So there was two properties I got tied up to those two private loans for over 2 years. And after those 2 years, looking back, I'm just like, I got those properties, sounds amazing. I was doing all the work, but who's truly making the money? It was a lender. It was not me, right? So those are the investment mistakes I made. But one of the things I came to realization very early on, like in 2015, when I was in engineering job, is that I was trying to figure out how to actually replace my income with real estate, profit. Okay, and the cash flow from rental property simply wasn't enough. And I was even scared to spend any of that because although there's a cash flow, I just wouldn't want to risk of not having the funds to repair, let's say, roof leaks or HVAC and all that stuff, because it can easily wipe out the entire margin for the year. So I started doing a lot of calculation, being Asian, being a little bit more calculated. I factor in a lot of things in, and at the end of the day, I realized that, you know what, I have to find ways to provide services, become a service provider for other investors first and use that as a way to kind of get into real estate a little bit more in depth so that I can make some money while learning this entire industry, while connecting with other people. And this is essentially the pathway that I did. So to be a little bit more exact, as I was pivoting away, I did flips and then I made some decent money by raising a bit of capital, put a project together, and made some decent money. And then I'm like, okay, that's not bad. But I couldn't see myself doing that every three months. And I knew that with flips, I kind of have to wait until the project is sold, which means there's no recurring income. So we end up starting a property management company for our own properties. But at the same time, because we literally saw that there's no other people doing it around McMaster University. So we launched a property management division, well, business at the time. Our only thing that we want to dedicate it in, and then we started doing cold calling with a lot of landlords that are out of town. So people starting with 647, 416, 905, we call all of them because we know they're 45 minutes away from the town. So we started reaching out all of them, asking them if they need property management service or tenant placement. Started with them, draw some like decent income, and that's how I transitioned out of engineering job. And from there, whenever we acquire a project, we also pitch them and see if any one of them would be interested in partnering up with us on the next deal. So that's essentially how I did it.
That's incredible. So property management was a huge part, having a business and having a business component to your real estate investing journey. That's another huge component of it as well.
Yeah, so I property management is the vehicle that I took at the time. It doesn't mean that that's the only vehicle for other people. It's just a business in a real estate field. You can, if you happen to have a real estate license, right, become a realtor first. That's not a problem. Mortgage broker, do that first. Insurance agent, like all that stuff can potentially get you into the door. Some people might be very good with their trade skill, right? Do that first, right? Connect with other landlords, right? Offer some sort of help, right? Make some money while you're connecting with them because the moment that you're doing that recurring sort of a income approach, then number one, it's a lot more scalable because you just stack up the number of clients, then you start making a little bit more. And number two, you start getting to know them on a regular basis. So whenever you have a right project, for us, property management draws a lot of problematic properties, right?
Hmm.
Landlords who are facing a bit of the issue with their properties. First question we ask is like, if the price is right, would you want to sell it? But if the price is right, yeah, like what's your thought, right? I was like, well, if we can kind of offload it. So we use this way to draw a lot of deal flow in, and then we just pair that with another investors and see if we can acquire this building. So it just happened that at that moment, property management is in high demand. We got in there, we make some money, we learn the industry, and we connect with like 40 other investors and started acquiring properties this way as well.
That's amazing. And managing over 800 properties, like it said,
Yeah, that's over time. That's over time. So it definitely didn't happen in the very beginning. And we also went through that kind of grind. I think anything has a learning curve. And that's why one of the things I always like to kind of mention to all the wannabe entrepreneur, wannabe real estate investors is that don't expect this to be passive in the very beginning. It's going to be hard initially. But it's so rewarding, is what I'm trying to say. Like once you learn how to control your finance, control the journey, it's so rewarding afterwards. But don't expect that to happen initially. But yeah, that's typically how I would advise people. Do things slowly. 800 units doesn't happen overnight. It's the 6, 7 years of hard work finally get to that point, and then you got a churn rate, you got people who are refer more clients in there, and that's why we're at like 800 units afterwards.
And that's, I just want to clarify, that's the 800 units you're managing through the property management company. Walk me through an example of, because you keep focusing on this cash flow, cash replacement, and these sort of things. And I know in your bio when I was reading it, there's flipping, there's wholesaling, there's different kind of strategies. And now you're also, it sounds like you're doing multifamily and you're in Cleveland,
Yeah.
Ohio, as well as in southwestern Ontario, both great markets. So, talk to me about an example of like your strategy now that you, as an active real estate investor, because I totally agree. Real estate investing, unless you write a check and give it to me, and I go and do all the active work for you until I give you a check back with your return, that is what passive is. Aside from that, real estate investing is so active. Even if you have
Right.
property management managing, even if you have buy, rent, hold tenants, even if you don't feel like you're doing no work, because in real estate investing, it could be quiet and you don't have any activity until it's not. And then it gets very exciting. And when it's exciting, things are usually going wrong. Um, so you always have to sort of be on high alert. So I love that you said it is not passive, it is active. Now, I'm sure if you have partners and joint venture partners that you invest for them, that's an example of how they could be passive.
For sure.
But for you and your work and your strategy, tell me about sort of active strategies that you are currently doing to really get that cash flow income that you need today in this year and in this current economy. Because another thing about the flips is if it's not a flip market, or if the market doesn't shoulder that strategy, us as investors have to go and change our strategies, really. We have to pivot and change, and I think that's every successful investor knows that. So, what sort of strategies were you kind of focusing on, and which ones really led you in your active strategies to get to this income replacement?
Oh yeah, easily. So in today's market, we kind of need to look at things not from 5 years ago where things are still going well. Right now, we're going through the turbulence still. So the goal here is very simple. Don't do too much better. For me, like I really slow down a lot of value added approach. I still do them, don't get me wrong, but it's just like we're not doing at the same pace as before. Finance management, risk management becomes a lot more important. So we will buy multifamily building. We will like partner with our other investors, but we would really stretch it up to like 3 to 5 year term, right? So with those type of building, you're doing a bit of a turnover here and there. The reason why I picked Ohio is because I look back exactly what I was doing, back in like from 2010 all the way to 2017, 2018. I wasn't doing a lot of things too crazy, too aggressively because the market at the time was still relatively flat. We're looking at maybe like 3 to 5% increase, or it was not 8 to 12% where we experienced from like 2020, like COVID time, all the way to 2022. But a lot of people's projection is still there. So I try to remove everything that happened around that time, and I try to go back to exactly what was actually working for me. It's very simple. Buying something in a more affordable market because then it cash flows. Once it cash flows, then you focus on the right location, right buy, and you do small improvement to really bring that rent up a little bit. And then when the time is right, you can do the refinance out of that project, with a lower interest rate, with a little bit higher spread for the building. So every bird that we're looking at, typically we're no longer trying to get that full bird in 3 to 6 months anymore. We're looking at maybe 1 to 2 year time frame. In some cases, it will be 3 years. So those are the investments side. Just doing it safely, grow it steady. Make sure that we're really waiting for the right opportunities, constantly looking at all that stuff. Now, the question here is that how do we do that effectively? Now it comes back to the active side. So in the States, one thing that we learned in the past 3 years that's very different from Canadian market is that the data is very transparent, right? In Ontario, we run ads before, and then we try to like source the off-market deal. Two things that we're doing is through property management channel. Landlords, tire landlords who are sick and tired, we're not sure how to deal with their tenants will come to us because we've got a property management company. Now, number two is we will run ads and then people will opt in, and then we will literally start having conversations, see if we can actually acquire the property off market. Now, the second one with the marketing approach, this is more like a pay by shooting in the dark type of strategy because in Canada, you really won't know their financial situation until you get into that due diligence process. In the States, it's very different. You pull the title, you select auction, you select tax delinquency, you select, outstanding balance on the mortgage, right? You pull the entire data in that specific location. So I could literally pull it, I can skip trace, I can get like literally 2,000 landlords or homeowners information right in front of me, within like just a few clicks. Once I have that, I put it through CRM and I started calling them or I start running a marketing campaign. And those are direct targeting for delinquent sellers. So when I figure out, oh my God, like things can be done very differently in the States, I started really getting good at finding those type of audience. And once those audience comes into our channel, it's just to have a conversation about when do you really need to sell, right? How can we prevent you from getting to that foreclosure process? And understand what kind of problem we can solve. Once we can solve their problem, their price come down, we prevent them from going through that foreclosure process. We basically acquire the property with a huge spread. And that's when we can either wholesale to another person for a fee, or we can add it slowly into our portfolio. So
Yeah.
the active side is a wholesaling side in the States, and we're doing a pretty high volume right now on a monthly basis.
That's incredible. That's incredible. Wholesaling was actually the strategy that we used to pay off $1 million of mistakes that we made in real estate when we started out.
Obvious.
And
Yeah.
it really can be an effective strategy. It's a very, very active strategy. But I like to think, and I always say in real estate investing, we always need to be wholesaling in the fact that we always make money when we buy. So there
Yeah.
always has to be that component there. But sometimes a great active strategy is we don't want to keep all the deals. Maybe it doesn't fit our buy box perfectly, or maybe we've reached a quota, or, it's not about collecting as many homes as possible. It's about reaching our income goals for financial freedom. And if I like this property and it's a great property, but I think that, I've accumulated my threshold for this year and I could just easily assign this for this, which allows me to achieve my goals. That also is a very business-like approach to take because real estate investing is not about hoarding. It's not about hoarding and trying to get to a certain amount and doing this. It really is about adding value to your actual life. And you as a business person always have to know what to acquire, what to let go, and don't let these properties own us. We want
I
to own
love that.
properties.
I love that. To a lot of people, I noticed that when the market is really, really healthy, a lot of people almost treat it like a ego play. And then,
Hmm.
yeah, people are talking about burying full bird and then growing as fast as you can, yada, yada, yada. But at the end of the day, I know every time you bury, you take out another loan. Now you have to allocate the funds responsibly, into another income producing asset. And this is where people end up getting into the position where they over leverage, which I have done that back in like 2015 to 2017
Hmm.
around that time, and I realized that it could be very, very dangerous if you don't manage that well. So I totally agree. It's not about number of units; it's about how flexible and how much freedom and control that you get to have on those financials, on your own financials. Otherwise, you end up working towards those properties, and then and people who end up winning is the lenders. It's not really the investors.
Exactly. And a question about the properties that you are acquiring, because I understand I love the burst strategy, but every time you do refinance, to an extent, you're spinning your wheels. So we always have to do the calculations afterwards to make sure that we're not, going to be stuck, like you said, or sure, it has to be very good returns if it works. Appraisals have been coming in very, very low lately, and BRRRRs, as the investor and the key investor, you have to make that decision. What's my next move? Am I going to burn up? If you acquired a building, let's say in Cleveland, you have decided the appraisal did not come in or the equity is not there yet where you need it. Do you all have a specific formula just to take advantage of the cash flow? So it's more of a cash flow play for the next 3, 5 years until you're ready to burn?
Oh yeah, for sure. Like by the way, in Cleveland, like we're talking about Cleveland. Why do you want to invest in Cleveland, right? It's just doesn't even come to most people's radar, and that is the reason why we invested over there. It's a tier two city. It's not sexy.
Mhm.
Price point is extremely low. Duplexes over there you can acquire still at 150K, right? So it's such a low purchase, low like such a low barrier of entry, but nobody's paying attention to. And that reminds me of Hamilton market back then. When we, like as a family, started investing in Hamilton before, a lot of people were just like, why not Waterloo? Like, why do you want to invest in Hamilton? Well, a couple of reasons. One, like I was a student there, so I kind of knew the market a little bit. But also it's literally because when nobody talks about it, it's pretty much like this is the best time or one of the better time to get into the market. When your neighbor started talking about specific market, you gotta get out already.
Yeah.
So to answer your question, there is a formula to it. The truth is, we with a multifamily building, anything above 6 units, you're playing with a cap rate. So you end up looking at the rent projection.
Mhm.
Anything under that, it kind of depends on the comparable of the sales. So not gonna get into too detail or too technical here, but the formula is very simple. As long as we can continue to increase the rent, which in Cleveland, there's no rent control. You get to increase it, you get to renew it based on the landlord's preference. If the tenants doesn't want to up the rent or they don't comply certain things, you get that eviction almost right away because you just don't renew and they basically have to leave. So
Mhm.
there's a lot of benefits to it. And the way that I look at it is that anything equity play stay in Ontario because it's a tier one city. Toronto is still one of the major like the cities in the world. In Cleveland, tier two city, I'm going in for cash flow, nothing else.
Mhm.
Yeah, so I will eventually burn, but that's when the rate comes up, sorry, comes down. That's when the occupancy goes up. That's when the rent gets improved and the building valuation goes up a little bit. So I'm not in a rush because right now interest rate is still high. So I'm just kind of doing things, keeping that cash flow steady, slow and steady. And then when the time's right, I can basically do my next move.
Excellent, excellent. That's amazing. So, how does this strategy really go against conventional financial planning advice?
Great question. So conventional, it also depends on what we mean by conventional, because we're so used to dealing with the B lender, private lenders, and all that stuff. So I would frame it as a conventional, as in a lender. You're using your income to qualify for mortgage and all that stuff. So the way that we're building our portfolio is that yeah, try to maximize that as much as possible. If you can find a deal that works and you can utilize your personal credit. But the moment that you're unable to do that, um, because again, A lender I still think needs to be considered because the
Mhm.
rate and mortgage fee is just so much lower and favorable to the homeowners. But the moment that you get out of that or max out your credit, the next thing you do is to look into B lender. And sometimes it could be private lender, sometimes it could be your joint venture partners. So creative financing, there is a big discussion. How we're running it is based on the performance of building, right? Based on performance of building, which means that we're using DSCR loan. Basically looking at your NOI minus your building expenses and all that stuff and play with the cap rate. That's how you can really draw that income. And using DSCR mortgage, we're not restricted with our personal income. So I don't know if that's outside that's unconventional, or that's still conventional too, depending on people's definition. But if I'm unable to do that, typically I bring in more investor in, and sometimes it could be seller itself, right? Using seller financing, or we took over the mortgage in the States. It's what we call sub two mortgage. We can literally take over other people's existing mortgage. The previous one that we did that was 2.8% only. Just took over other
Wow.
people's mortgage, and then we leave a very, very little capital in, and that one is strictly cash flow play. So many different ways to structure a deal, as long as you're aware of how the deal is structured, and that's how you can make things happen in the US market.
That's amazing. I love that. That is, I think creative financing, every investor gets to a certain point where you may not be able to qualify for with those A lenders anymore. So creative financing is always a very, very important tool and not one that and many people know much about as well. You got to kind of really get into the investing world and then learn what tools are available for you
Yeah,
out.
yeah.
So if you were starting from scratch today, with no followers, no capital, no connections, what secret move would you use to get ahead fast?
Yeah, so and I want to ask, maybe add one more condition here. Do I have the money or do I not have the money? Like how much capital do I have to start it off with?
You have no money and you
No
don't
money
even
at
have
all.
friends
Okay,
or
so
followers, that awesome Instagram account.
yeah,
Or
yeah. In
you
that case,
have. That doesn't even exist yet.
yeah, yeah, perfect.
What would you
Yeah,
do?
I always want to clarify that question because if it's no money, no following, no resource, right? The answer is very simple. You have to go through the grind phase, right? You have to become a service provider, make some money, active income while learning this entire industry. And I look at it as my journey back in like 2015 all the way to 2017, 2018. It was just a lot of grind, a lot of like effort, sweat equity into the business, into building that portfolio. So um see like talk to like first step is literally go out to the local events, talk to the active investors, try to find who these people are, ask them what they might need. That's really the first one because a lot of times when we're thinking about getting into real estate, we're thinking from our own perspective. We're doing research based on our own perspective. Get out there, talk to other people who are right here so they can share their perspective with you. They can share what they need or what they don't need, right? And based on that, find out the gap of the demand. If property management is one of the things that they mentioned that they just couldn't find the right property manager, start with that. If they say they just couldn't find the right deal, right, in today's market, high interest rate, a lot of sellers, they just want that someone to be able to actually source a deal for them, be that person for them. If they're out of town and they need to manage renovation, right, be that person for them. So depending on what the demand is, start with that, make some money, connect with them, and then try to add a few more clients like that. Okay, and once you have that, the next thing is figure out how to source a deal. Because now you have your client base that's paying you on a regular basis. Find out the deal, like find out where to source the off-market deal that fit into their criteria. And once you find that out, you can then wholesale the deal back to them. Or you might say, John or Mary, I got this deal in the pipeline that I also want to like acquire ourselves, right? And I'm lining up with a couple investors, but since we're working together, are you interested in maybe coming on with us? Or, you can do a little soft pitch to them. And if one or two of them says, yeah, great, would love to actually do a deal with you since you're managing my portfolio and I'm happy about your service, you end up turning them into basically your private money or joint venture partner, like money partner into this deal. So that's the exact pathway that I took from 2015 all the way to 2016, 2017. I didn't touch any of my family funds. I didn't touch any of my equity of my properties because I just wanted to make sure the business and personal stuff is kept separately since I had a business partner at the time. And that's exactly how we did it. So anybody who is trying to dive into real estate, that's exactly how I would advise them.
I love that. That is very, very inspirational because note, I never said you had no experience or no education or you
Yeah.
didn't have the know-how. And I think that's what's people, if people are willing to learn and really go outside of their box and learn new things, anyone could really start applying this and creating financial freedom and really, really making it possible. But you just have to go with that. I loved that answer.
Yeah.
What is the biggest lie or misconception about wealth building that keeps 98% of people stuck?
Definitely passive, right? The word passive is throwing it's really giving people a wrong expectation in this field. It doesn't matter if you're taking the active approach or passive approach. Passive approach also means that you need to learn, you need to understand the business, you need to maybe approach other investors for money. You need to find ways to analyze the deal or find ways to create that deal flow for yourself. Initially, it's not passive, it's all active hours of learning, hours of grinding, trying errors, um, to really understand this business model until you get your first property, and then boom, there's a tenant placement, there's a project management, there's a property management, and there's a how to hire people. So first, I want to say like probably like 10 units. Don't expect that to be very passive. It's gonna be active and it's okay. Okay, so I just want people to throw that out of the window for a bit. Real estate is a long-term wealth building. Like it takes time, very rewarding, and it created like 90% of millionaires either own or have done real estate. It's a proven method that will continue to work, but just don't expect that to be, no work initially, very little effort. Dive in, show the commitment, make something happen, and looking back 5 years from now, 10 years from now, you're not going to regret this decision.
I love that. I
So
love that. And what do you see the top 1 to 2% wealthiest people and families? And this could be people that you see in your network, that you know, people that you study, that you mentor from the books. I know I'm sure you're like me, you read a lot of books, listen to a lot of
yeah, right. Yeah.
podcasts. What do you see all them doing consistently that the rest of the world ignores or avoids?
You know what? Self-development, I think, is one of the bigger one. And there's a lot of things, but taking massive action is definitely one of them. And I want to kind of talk about this. What does that actually mean, taking massive action? It's not about just listening to podcasts. It's not about just, taking free information. Like you can do all of that. Now we have a YouTube, we have ChatGPT, we have Google, right? Getting to the information is so easy, but taking action in my opinion, in my definition, doesn't mean just gathering information. Like you need to learn all that stuff. But after 1, 2, 3 weeks of learning, you got to turn that into action, being out there, talk to some people, because whatever you're learning in that space is at your current perspective. We gotta figure out how to bring in different perspective so that you can see things from different dimensions. So I always like to advise people that just take a lot of action because that's what I do. Whenever I feel like I'm hitting a bit of a bottleneck, I'm in a different room where other people are ahead of us, and I don't care if I need to pay in there. And yeah, because people love speed, and you have to be moving a lot faster, and that's essentially what 1 to 2% of wealthiest people. I personally, I haven't really met like billionaires or all those people, but people who are in millionaire type of status, they all make decision fast. They all take a lot of action. They're all very fast with the decision, and I can tell it's not because they have the high amount of certainty about that direction. They just know that if they go through it, they can keep correcting. They have the confidence in believing in themselves, making those adjustments along the way. So yeah. What differentiates people is the amount of action they can take for a long period of time. That's typically what I see.
I love that. I love that. And as a parent, I think that's really important too, to instill these sort of behaviors and philosophies, and like your parents did for you, into your kids' life. It's not about putting a hammer in their hand and making them go invest in real estate. It's about kind of like instilling an anything's possible, no caps lifestyle is what I like to call it to my kids. And when they fret about, oh, I don't know what I want to do or what job I'm going to get, or I'm like, you could do anything that you want to do. And it's not, you don't have to know right now. You just have to be positive and trust to, don't be scared to make mistakes, put yourself out there and be in a growth mindset for
Yeah.
sure.
And try it. Just try it, see if you like it, because you won't know until you try it.
Exactly. Fail forward.
Oh, yeah, I love that. I love that. Yeah.
Is there anything else you'd like to share with the audience before we end this interview?
Don't wait until you're fully ready. Your only perspective is not going to help you get too much ahead. You got keep doing things. You got keep trying things. So take whatever you're learning from this summit, try to apply it immediately. I'm talking about immediately. Next like 1, 2 days. Learn something. Oh, let me try it. Let me try it. Let me try it. It's okay to fail a little bit. It's okay to make some mistakes. You're not going to make major mistakes initially. Okay, I'm talking about like before you make that offer. So try different things, connect with people, listen to this summit, connect with more speakers, and then see if you can get a different perspective that will inspire different actions.
I love that you said that because the whole purpose of the summit is every expert being interviewed is very unique. It's not, I'm a full-time real estate investor, you're a full-time real estate investor, but there's many other ways to build wealth that are being featured on this summit. And the purpose of it is to show, if hopefully people listen to all 21 interviews and are inspired from a particular wealth building tool and strategy, that they're like, hey, this is something that I want to start focusing on and I want to start learning from. So I thought this was amazing. I understand that you have a free gift that we're going to be including
Yes.
for our listeners. Can you explain what that is?
Yeah, actually, for this summit, I have two to share. One is anybody who want to kind of get out of the Canadian market, and not like get out, just like want to explore different options since the price point is so much higher, and you're interested in getting into something like way more affordable, like tier two city. We got a list of training for the audience, for the cross-border investing side of things. It's gonna be remote investing. It's gonna be a lot of I guess people need to get out of their comfort zone to do this. But if you're just starting out or looking to scale, I think that this could potentially be your cash flow play for the next like 3 to 5 years. So list of training that's going to be giving out completely for free. Another one is people who want to kind of use that as more like an active approach. It's more like a wholesaling, how to actually find the off-market deals sorry, let me take a step back. It's not really for wholesaling, it's for any investors who want to kind of learn about how to source the right deal and buy right for their next deal. Figure out how to use the right tools to source the off-market deal. And there's a system in place that we literally map out everything. And there's an acquisition. And if you want to become a wholesaler, the last session, which is disposition, that will walk you through step by step how we actually assign the contract and find the cash buyers.
Amazing. No, thank you for that. Yeah, we'll definitely include the URL and the links to that gift. And then people, anyone could click on that URL. We're going to be sending a follow-up email, well, with the video recording, and the URL will be below there. And I'm sure a lot of people would love to take advantage of that amazing gift. Thank you so much for your time and sharing your journey to financial freedom. I feel inspired. I am sure the audience will be very, very inspired. And to the audience, thank you so much for tuning in. Make sure to open your inbox tomorrow. We'll have another amazing interview from a speaker who is also talking about a very creative strategy that they've used to get financial freedom in their lives that you are able to apply to your own.